Well, Powell predicts a time when mortgages will be impossible to get in parts of the United States. Now, you might look at this article and get a little bit worried about what Powell is saying, but let's actually dive into this article and see what he is actually saying here. In the first couple of sentences in this article, it says Fed chair told Congress that the country's spiraling insurance crisis spells future trouble for getting mortgages. Okay, so although you might think it's about interest rates, he's really talking about insurance costs. This article also goes on and says that the industry may make it hard to get a mortgage in parts of the country in the coming decades. Federal Reserve Chairman Jerome Powell said on Tuesday. If you fast forward 10 to 15 years, there's going to be regions of the country where you can't get a mortgage, he said during the semi-annual testimony to Congress, noting that banks and insurance companies have been pulling out of coastal and fire-prone areas they deem too high risk. Insurers, have been canceling policies across the country as climate change intensifies natural disasters, adding them with multi-billion-dollar losses. State Farm, for example, canceled thousands of policies in the Pacific Palisades neighborhood of Los Angeles months before the devastating wildfires. So he's really just talking about insurance, as you can clearly see, but he was also questioned about interest rates and home affordability. So let's see what happens there. So in the article, it says questions about high housing costs came up repeatedly throughout Powell's testimony. The Fed chair reiterated that interest rate normalization may help buyers in the years ahead, but most of the problems with affordability boil down to a lack of supply, an issue outside of the Fed's purview. So the big issue that we have in this country with the home affordability, in addition to the insurance costs and the high rates, obviously, is just the lack of supply. So basically saying that if rates do come down and get under normalization, that it may help buyers, but it really comes down to the lack of supply. Let's see what else it says on this article. So even if the rates do fall, Powell said, it's not obvious that lower rates would slow housing inflation because demand would likely rise, right? So what he's saying is basically when rates eventually come down and get under normalcy, right? It should drive up demand, all this pent up demand that we've had in the mortgage industry, right? All these people will get qualified, and it's not like a lot of people or it's not like we're going to have a lot more inventory available, which is only going to hurt home affordability and just make it a lot harder in the future, on top of the obviously the high cost of insurance and everything else that we have going on right now. So if you're thinking about buying a house, maybe you should consider seeing if you can buy something right now, because according to what's being said by Jerome Powell, and you can choose to listen to his advice or not, but he's saying that it might become unaffordable